everyone's talking about an AI bubble.
For months, we've been hearing about the threat of an AI bubble.
It is the fear of an AI bubble. Tech CEOs are talking about it, banks are warning about it.
Unless you're the most optimistic person on the planet, you know you're in a bubble, right? There is no question you're in a bubble.
Some say it's already popping. Others swear it hasn't even started. And if you've been scrolling through headlines lately, it feels like we're watching a tech gold rush crash straight into a financial panic. But here's the wild part. Both sides think they're right. Investors are making billion-dollar bets. At the same time, people are warning that this is the next dot-com moment waiting to explode.
I think it's both rational, and there are elements of irrationality through a moment like this.
Companies are growing faster than ever, yet the fear is louder than the numbers. So what's actually happening here? When did all this bubble talk even begin? And more importantly, who should you trust? Today, we're breaking down the timeline, the fear, the hype, the money, and the reality behind this whole AI bubble conversation. For a week now, everywhere you see news, YouTube, Twitter, everyone is talking about another bubble. Economists, investors, everyone is saying this AI bubble is going to burst. Michael Burry, an investor you know from the movie The Big Short, known for his shorting of the housing market in the 2008 housing crisis, is calling it a bubble. Warren Buffett is holding more cash than the Feds so that he can buy back the market when it crashes. Everyone is talking about it and making preparation for a market crash. So, how true is it? When people say AI bubble, they mean prices, hype, or investments around AI feel bigger than the actual value being created.
It's boom. What's booming?
AMD's stock is surging.
NVIDIA's rocking the entire market right now. The stock a new record high.
Where do you see this thing going?
I see it going to 8,000.
Think of a balloon getting bigger and bigger. If the balloon pops, investments, jobs, and companies could get hurt. It all had already started in early 2023 and 2024 when investors started investing heavily on any AI venture with ridiculous valuations. AI needs massive compute, data centers, and energy. Companies spend billions before they see profit. If the money doesn't come back fast, that's risky. And when the hype dries and investors see the real risk, they realize it is a bubble. OpenAI's own CEO started calling AI a bubble. Big investors, banks, and CEOs all started to worry about the growing risk of an AI bubble. Now, stock market is influenced heavily by investor sentiment. Investors started investing with high valuation without a clear revenue stream, only because of FOMO. And the reason they are now pulling money out is from that same FOMO. When big investors like Warren Buffett and Michael Burry publicly announce that they are shorting the AI market and holding cash, the public panics and starts selling. On the other hand, Goldman Sachs, in a research report titled AI Stocks Aren't in a Bubble, argues that despite the concentration risk, AI-driven companies are likely to drive long-term returns. And these conversations were already happening in early 2023 and 2024. So this AI bubble talk and AI being overvalued talk has been going on for a long time now. It only came to light recently, and we are seeing some shift in the market now because of the Michael Burry report. His report says that the AI market is basically caught up in round tripping. In the dot-com era, they called it vendor financing. Now it's rebranded as strategic investment.
A precarious investment strategy is emerging in the world of AI, something we are calling the circular deal theory. NVIDIA invests in OpenAI, and then OpenAI turns around and spends that investment on NVIDIA chips. The cash goes out the door as investment, and it comes right back in as sales. It is a perfect circle.
Big tech gives money to their customers. Those customers then spend that same money back on big tech's AI products, and tech companies record it as revenue. On paper, it looks like massive growth. In reality, it's artificial. NVIDIA invested in 49 of its own customers last year. Microsoft did it with OpenAI. Google and Amazon did it with Anthropic. And Wall Street firms are doing the same thing. But now investors are waking up. They're pushing big tech to finally show real AI profits, which none of them have, because not a single AI startup is profitable. Microsoft and Amazon have already started cutting data center expansion plans, a sign that this whole game might be nearing its end. there is a bubble. There is no doubt about it. But it's not the same as the housing market. The housing crash was inevitable. It was hidden. And when people realized what was going on, there was nothing anyone could do to stop it. This is more like the dot-com bubble. Investors bought any stock with a .com, and when it crashed, only 40% of companies survived. But this is a tech-based situation, and in tech, the only thing you need is a breakthrough. And by the rate this AI industry is progressing, it's not impossible. Even if that breakthrough doesn't come soon, there is no going back. We now have AI, and we are not going back to a time when we didn't. The only road is forward. We need the chips, and NVIDIA is the best in the game, and ChatGPT, Gemini, and the mainstream AI models are backed by big companies. They are the market leaders. Other AI companies without strong research, innovation, or a stable backbone are at risk if this bubble bursts. And if you're skeptical about this whole situation, remember one thing: the market always corrects itself. The whole idea of an index fund is built on this simple truth. At the end of the day, the market adjusts to what's real. And the AI space will go through that same cycle. Some companies will fall, some will survive, and a few will come out stronger than ever. The ones building real technology, real products, real innovation, they'll stay. The ones built only on hype, they won't. That's how every major tech shift has played out. Markets rise, markets fall, and then they stabilize. That's the rhythm. What matters is whether the underlying technology is real. And AI is not just real, it's inevitable. So don't let fear or hype drive your decisions. The market will correct itself, with or without your reaction. Your job is to understand the bigger picture. Stay informed. Think long-term. Because the future is being built right now, and AI is going to be a massive part of it.